Welcome. In this video, Xcn coin is starting to rise. We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. When we examine the chart, a notable support zone stands out just below the current price action. This area holds significant importance in technical analysis and is considered a critical structure for investors. As seen in previous price movements, this support level has been tested multiple times in the past, each time resulting in strong buying reactions. This indicates that the zone is not just a simple price range, but also a convergence point for investor psychology. Such support areas are considered safe havens by buyers during times of market uncertainty, and this remains true in the current context. We can observe that the price is not very far from this support zone. If the price pulls back toward this level in the short term, there is a high probability that we will see a buying reaction similar to previous chart patterns. These types of structures are viewed in technical analysis as potential buying opportunity zones, and with buyers stepping in, a new upward wave may begin. The fact that past rallies from this zone were supported by strong volume further strengthens the credibility of this support area. The functioning of support levels contributes positively to the market, not only from a technical standpoint, but also from a psychological one. Many investors and algorithmic systems are programmed to initiate buy orders automatically when these areas are reached. This often results in sudden buying pressure and a rapid upward movement in price. At the same time, this support level could be a potential turning point, as investors will base their decisions on whether this level holds once again. If this support area holds, it could lead to not only a short-term bounce, but also the beginning of a more medium-term uptrend. Each successful rebound from a support level renews investor confidence and increases the volume of buying activity. This creates a strong technical dynamic that supports a more decisive upward move. Moreover, the more a support area is tested, the stronger it becomes. This reinforcement increases the likelihood of a similar reaction if the price returns to that level. Given the current market structure, a downward correction toward this support area appears to be a highly likely scenario. However, this should not be seen as a negative development, but rather as a potential buying opportunity. Testing a strong support level creates a positive environment, both for new investors to enter the market and for current investors to hold their positions. These kinds of support zones are seen as breathing spaces within the natural market cycle. That is, the price doesn't fall, it merely pulls back, setting the stage for a stronger upward move. When we analyze past price actions, we see that strong rallies have often followed movements from this support area. This is clear evidence of how seriously investors take this level. In technical analysis, zones that have worked in the past tend to continue to do so in the future. Therefore, if a pullback to this support level occurs, a rebound upward is a technically sound and highly probable outcome. Additionally, the fact that the price moved sideways just above the support area for a period indicates that a consolidation occurred there, turning that level into a solid base. Consolidation areas generally act as strong support or resistance. For this reason, if the price revisits this level, it is technically expected that buyers will step in again and push the price upward. But we can't rely solely on support to make a decision. Let's take a look at other metrics as well. Stay tuned. When we carefully examine the chart, we can clearly see the formation of an inverse head and shoulders, H and S pattern, commonly encountered in technical analysis and often considered a precursor to significant upward movements. These types of patterns are among the most trusted structures by investors, as they have been proven reliable countless times in the past. The inverse head and shoulders pattern typically forms at the end of downtrends and provides strong signals of a potential new uptrend. The appearance of this pattern on the current chart presents a very promising technical outlook. The left shoulder of this specific pattern formed following a decline and a subsequent rebound. A sharper sell-off that followed shaped the head of the pattern, with the price hitting a bottom and finding strong support at that level. This area became a zone where market participants showed significant buying interest. Then, with the recovery that followed, the right shoulder began to form, and during this process, the price continued to find buyers at levels similar to those of the left shoulder. This suggests that the market now sees these levels as a base. With the right shoulder now taking shape, the pattern is close to completion. Once the structure is complete, the most important factor becomes the breakout of the neckline resistance. This line typically runs horizontally or slightly angled through the peaks between the left and right shoulders. In the current chart setup, we can observe that the price is moving close to this neckline area. If this region is broken to the upside with strong volume, the inverse head and shoulders pattern becomes active, and this breakout serves as a clear buy signal for investors. Such a breakout can completely shift market sentiment and trigger the beginning of a new uptrend. The target of the pattern is measured quite clearly in technical analysis. Typically, the distance from the lowest point of the head to the neckline is taken and then projected upward from the breakout point to determine the target price level. In this case, the distance between the head and the neckline is quite significant. This suggests that once the pattern is confirmed, the price may have substantial upward potential. This potential could mark not just a short-term move, but also the start of a new medium to long-term trend. These types of patterns carry not only technical but also psychological meaning. The structure signals that sellers are losing strength and buyers are gradually gaining control. Especially when forming the right shoulder, the fact that the price no longer makes lower lows is interpreted as a positive reversal signal. Once investors recognize this pattern, buying interest increases, acting as a key catalyst for price movement. Therefore, the currently developing inverse head and shoulders pattern can be interpreted not only as a chart structure, but also as a sign of renewed confidence in the market. Additionally, large patterns like this are often confirmed by strong volume support. A breakout of the neckline accompanied by rising volume enhances the validity of the pattern and contributes to a healthier and more sustainable price movement. This sets the stage not just for a brief bounce, but for a more lasting upward trend. The recent volume behavior in the market may also be giving positive signals in this direction. Especially the increase in trading volume in recent days may indicate that this pattern is being closely watched and that investors are preparing to take advantage of this opportunity. When we take a close look at the RSI indicator on the chart, we can observe the formation of a highly promising structure from a technical analysis perspective. In particular, the movements shown by the RSI so far indicate that a positive momentum is beginning to build in the market. As you know, the RSI is a highly important technical indicator that shows whether an asset is in overbought or oversold territory. However, it's not just these zones that are important. Trend structures can also be effectively monitored through the RSI. At the moment, a positive upward trend is forming on this indicator, and this is a technical signal that investors should watch closely. This developing upward structure shows that the RSI line is forming higher lows over time, progressing within an upward trend channel. This is valuable because it indicates that selling pressure in the market is easing and that the buying side is becoming increasingly active. When the RSI makes higher lows like this, it's a strong sign that prices are generally holding at higher levels. In other words, the fact that not only the price but also the momentum is moving upward suggests that the uptrend is developing on a technically sound basis. This trend line also has the potential to act as support during possible pullbacks in the RSI. The RSI may occasionally approach this trend line or even make brief touches. However, such touches typically act as rebound points. This is because market participants closely watch these types of technical support zones and tend to be more willing to take long positions in these areas. Therefore, if the RSI approaches this rising trend line again, there is a high probability that it could bounce strongly from that point. Such a scenario could also lead the price to initiate another upward move. Additionally, the formation of such trends in oscillator-based indicators like the RSI not only shows that the current momentum is positive, but also indicates that the overall market psychology is beginning to shift in a positive direction. For the RSI to form an upward trend, prices must also move in a way that supports this tendency. In this case, if the RSI approaches the rising trend again, it is highly likely that it will gain strength from this key technical support and trigger a new upward move. When the RSI bounces off the trend line, the price will bounce as well. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.